Welcome to lesson 6 of the Daniel FX Forex trading strategy. A strategy that I believe will make you consistent profits. Today we are going to be talking about market manipulation. Let's get straight into it. So, before I tell you my understanding of market manipulation, I like to look at the dictionary term of market manipulation. I like to look at the Forex trading books manipulation. Forex trading books definition of the terms that I'm researching. I do my learning on Investopedia. If you are confused about any forex term, any financial market information or concept that you can't grasp, just go to investopedia.com. What is market manipulation? Market manipulation is conduct designed to deceive investors by controlling or artificially affecting the price of securities. That was the term, that was the forex trading term. So here is my understanding of market manipulation. So basically, market manipulation is the smart money. When I say smart money, I mean your banks, your hedge funds, your billionaire investors, your billionaire institutions, your billionaire traders. Those people, guys, you must remember there are two types of traders. I mentioned this in the other lessons. That's why I urge you to watch these lessons in order. There are two types of traders. There are retail traders, which is us, and there are institutional traders, which are all those figures that I mentioned. Your hedge funds, your banks, your billionaire investors, your billionaire traders. That is smart money. Those are the people that move the market. Those are market makers. They have an incredible amount of volume because they have just a huge load of money. So they have enough buying power to manipulate the price movements. We don't. Us as retail traders, we have no control over the forex markets whatsoever. So market manipulation is the smart money manipulating price movements to deceive the retail traders, which is us, for their benefit. This is a $5 trillion business. If I Google search now, I think the last time I checked it was $5 trillion. Let me show you where all that money comes from. So forex market worth of transactions per day. So guys, forex trading amounts to approximately 5 trillion. 5 trillion, yes, trillion, not billion, per day, guys. This is the largest. Guys, it's amazing. It's amazing. When you love what you're doing, when you love this industry, you will perform. So forex trading amounts to approximately $5 trillion. $5 trillion per day circulating around the forex market, just yours for the taking. So we may ask, where is that $5 trillion coming from? Well, it's coming from us. That money, that 5 trillion per day, is coming from me and you, the retail traders. When you make a loss or when you blow your account, that money goes straight into the market. If you do another Google search, let's say success rate in forex, and then you will see why this industry is so big or is worth so much money. A well-known figure in the forex world is that 90%, not 70, not 80, 90% of forex retail traders do not succeed. And I think that number has grown. I know for a fact that that number has grown. 90% of forex retail traders do not succeed. So where is that money coming from? It's coming from the 90% of the forex retail traders that lose money. So if 90% of forex traders lose money, all that money is circulating in the market. That's why this industry is worth $5 trillion per day. And how exactly does market manipulation fall into this? It plays a huge role into this 90% failure rate, because, as I said before, let's go back to the notepad. Market manipulation is the smart money manipulating price movements to deceive. That's the keyword right there, guys. To deceive the retail traders for their benefit. Deception, guys. Manipulating price movements to deceive the retail traders for their benefit. So those 90% of traders that do not succeed, the main reason it's because they do not understand that they are being deceived by smart money for their benefit. So this is why it's so important, guys. Why is this important? It is important so you don't get tricked by smart money. Rigged. So you don't get tricked by smart money. Guys, this point is so severely important. It is important so you don't get tricked by smart money. And if you don't get tricked, obviously you will not lose all your funds. You will not lose all the money that you have invested. That's why it is so important. Another reason that I would say it's important, it's so you can make money. That's basically the other reason, so you can make money. If you understand the manipulation by smart money, if you know how they move, you will move with them and you will make money. So you can become profitable. Yeah. So you can become profitable. That's why this is important, guys. That's why it is so important. Another point that I would say is why or how can we use this to our advantage? How? Once you understand this, guys, you will be set, you will be ready. So how exactly can we use this to our advantage? So let's go back to Google. So the stats are 90% of Forex retail traders do not succeed. So you may be asking, what happens to the 10%? The 10% of Forex traders that do succeed, what are they using? Obviously, you will spend most of your Forex days searching for the secret, searching for the holy grail, searching for that indicator, searching for that robot, Guys, it simply does not exist. There is no magic tool, there is no secret. It's basically moving with the smart money. That is literally it. The reason I put this as lesson number 6 is so you can understand the basics. This is more advanced. You see, guys, once you understand this, your trading will improve. So 90% of forex retail traders do not succeed. The other 10%, they simply follow what smart money is doing. They trade with smart money. These 90% of forex traders that are not succeeding, they trade against the smart money. I mean, if you think about it logically, you are trading against an entity that moves what you are trading. I'll say that again. You are trading against an entity that moves what you're trading. You're trading against it. So that's why the stats are so high, 90%. The other 10% is simply trading with smart money. So how can we use this to our advantage? How can we use market manipulation to our advantage? We can simply trade with smart money. That's literally it, guys. We can trade with the market makers. We can trade with the people that move the markets. So let me show you what I've been ranting about. So this is your structure, right? I have gone through this in my previous lessons. If you're confused, look back. This is your market structure, and then you have the zones that we talked about. So you have this situation. This is the way the market moves. You have your break, you have your retest, and then from here it goes up, and then you have another break, you have your retest. Yeah. But as we know, this is how it looks in the forex textbooks. It's not how it looks in reality. So this is what you'll see often. You'll see something like this. You have your structure, and then here's your zone. So guys, this is exactly what you see often in the forex market. You will see something like this, where you broke a zone. Let me use another color. Where you broke a zone, you are expecting it to come back down, and then this is where you look for your buy. This is where you look for your buy entries. So you put a buy position here. But knowing the market, it goes below the zone. Now, something you must understand, they are, in this current situation, there are billions and billions of dollars circulating here. Right here. Billions, guys. Billions of volume, billions of liquidity is circulating right here. Because you must understand, guys, there are stop losses here. You have the impatient traders, which is most of the traders. Their stop losses are here, and they enter the buy here, and then the stop losses are here. You have the other traders, they have limits here. They have your sell limit. So basically a sell limit, meaning once it touches this line, it will automatically open a sell order. So what you're used to is the market execution, which opens the order now. But with your sell limit, immediately the price touches this zone here. Immediately the price touches the sell limit, it will immediately open a sell order. So under this zone here, under our little zone here, you have stop losses, billions and billions of dollars. On top of that, you have sell limits. So there is just money here, guys. Right here under this zone, it's full of money, billions. So obviously, you as the smart money, you want to profit of your buy orders, and to profit of your buy orders, you need sellers. So what you do as smart money, you make the price go below the zone. You make it go below the zone. As shown here, you make the price past the zone, and then immediately this happens, all the stop losses are triggered, which brings money into the market. All the stop losses are triggered, all the sell limits are triggered. Now you're in a sell, and then this impulsive move happens, and then you blew your account, you lost all your funds, or you're in an incredible amount of loss. So they do this to profit off their buy orders. When this happens, it's an institution, they want to profit off their buy orders, so they will make the market to sell. And once it passes the zone, billions of dollars are collected, and then they push impulsively, guys, with a large amount of volume. If I can show you an example of that, they push the market to the opposite direction. Something like this move right here, they can create a huge move like this, guys. That's the amount of force that the market holds. So after this happens, they push the market to the opposite direction, and millions of traders are left with their losses. But now, how can we use this to our advantage? What if you're the trader that puts a buy here, or you have a buy here? All these profits can be yours, guys. This is how we use this to our advantage. All these profits, this is money here, billions. If we are that trader that once it breaks, we know that no, this is a market manipulation, and we are waiting for it to break the break. I know that may sound confusing, but that's how we identify valid breaks. Let me give you an example right here. This is the exact same situation, right? We have a break and then a retest, and then we are expecting the market to buy again. So we experienced a break right here. We experienced a break. Now, to identify if that break is valid, we put a horizontal zone under or above the last candlestick. So as you can see, this candlestick, it didn't break, the body didn't go below our zone here, but then this one did. Now this candlestick is extremely important. Once this one breaks, you put a horizontal line at the last place that the candle or the candlestick touched, which is right here, guys, which is right here. So I will put my zone right here. So now this horizontal line is important. Look how much the price is avoiding to close below this horizontal line, because this is market manipulation. This is market manipulation. Look how much the price is avoiding to close below this line. If the price closes below this line, then I know that it's not market manipulation and I was wrong, and therefore I will close those losses. But if the market is avoiding that horizontal line, it's clearly market manipulation. To identify a valid break is to draw your horizontal line under the break of break. This is exactly what I was telling you about, guys. So we'll see how this trade turns out, but immediately I saw this setup, I thought of making this video. So I expect a impulse move like this one, because guys, there is billions of dollars right here, because the market broke, and when it came back to this zone, there were stop losses here, there are sell limits. So what the smart money will do, they'll push it to the opposite direction. So be that trader, guys, be that trader that gets this, not you are in a sell position and this happens to you. No. So let me give you a sell setup of this scenario. So you have your structure. It's basically just the opposite, guys. The same analogy, it's just the opposite. So right here, guys, you have your structure, and then you have your zone here. Let me make it a different color. You have your zone. And then you have a break. You have a break, a retest or a retracement, and you have your sell here. And then the market keeps pushing up. This is not an accident, guys. This is on purpose. So the same thing we discussed earlier. There's stop losses here. There's stop losses here. There is this time buy limits. The opposite is true. Sell limit is when the price touches that zone, or touches that instruction, it will immediately sell. And then when the price touches the buy limit, it will immediately open a buy order. So you have billions, guys, billions of dollars sitting right here, billions. So the smart money, and by the way, guys, smart money sees all the orders in the market. They see all the stop losses. They see all the pending orders through your broker. So the market sees everything that retail traders are doing. That's why you should also never put your stop loss too close. That is also the main reasons why traders fail. They put their stop loss too close. Imagine I'm the trader that puts their stop loss here. Imagine in this same trade that I am in now. Imagine, and it's a real account, guys. I can't believe that people say we trade demo accounts. It's a real account. So imagine I'm the trader that here's my zone, right? Here is my zone, and I put my stop loss here. Of course I'm gonna get stopped out. The smart money, these institutions, they can see all the stop losses. This is why there's so much failure in this field, guys. So stop losses here, buy limits here, you're stopped out, your buy order is triggered, and then boom, the market goes in the opposite direction. Your money, your hard-earned money, straight into the markets among the billions of dollars. Guys, practice this knowledge, practice all these lessons that I'm providing for you. Do the hard work, especially when you don't feel like it.